Good morning, Madam Lecturer and everyone. Today I will present the article information and introduction of our article review. The title of the article is Tying the Knot, Linking Bootstrapping and Working Capital Management in Established Enterprises. It was written by Margaret Fisamon, Teresa Hogan, and Michael Thomas Hayden and published in the Journal of Applied Accounting Research in 2025. This article focuses on the relationship between working capital management or WCM and bootstrapping in established businesses. Working capital management is the process of managing companies' short-term assets and liabilities. It helps businesses maintain healthy cash flow, support daily operations, and pay their short-term obligations on time. Bootstrapping refers to using a company's own internal resources instead of external financing such as bank loans. These approach have reduced financial pressure and improves financial independence. The purpose of this review is to examine the relationship between bootstrapping and working capital management, explain the article's key finding, and highlights their importance in helping businesses achieve better financial performance. That is all from my presentation on the article information and introduction. I will now pass the presentation to my next group member who will present the summary of the article. Thank you.
Hello everyone, today I am going to present a summary of this research article. The main objective of the study was to examine the relationship between bootstrapping and working capital management in established businesses. The researchers wanted to understand how these two financial strategies work together to improve cash flow and reduce the need for external financing. For the methodology, the researchers first reviewed previous studies before conducting a survey involving 167 established MSME in Ireland. They then analyzes the collected data using factor analysis. The studies found two common bootstrapping practices. The first is delaying payments and making personal financial sacrifices, while the second is encouraging customers to make payments earlier through advance payment and quick invoicing. Overall, the findings show these practices help businesses improve cash flow, manage finance more effectively, and also support long-term business growth. Thank you.
Hi everyone, my name is Tibasri Arumugam. Today I will be discussing the evaluation of the study, focusing on its strengths, limitations, methodology quality and validity of conclusion. First, I will discuss the strengths of the study. One major strength is that it provides as a original contribution by explaining the relationship with financial bootstrapping and working capital management among SMEs. The study also has a strong methodology as it collected data from 167 Irish SMEs and used validate measurement tools. In addition, the reality of the finding was supported by good Cronenberg alpha value of 0.847 and 0.713. Overall, the study provides useful insight for SME owner and research in understanding financial management practice. The second is limitation of the study. However, the study also has limitations. Firstly, it only focuses on SMEs in Ireland, so finding may not apply to business in other countries. Secondly, the data was collected in 2014, which may not fully reflect current business conditions. The study also relied on self-reported data, which may cause response bias. Therefore, this limitation should be considered when interpreting the result. Next, I will discuss the quality of the methodology. The research design was applied because the researchers used surveys and exploratory factory analysis to examine the relationship between variables. The study also applied reliability testing and data analysis techniques to improve accuracy. However, the research mainly used quantitative data and did not include interview or qualitative methods. Overall, the methodology was strong, but additional method could provide deeper insight. Finally, I will discuss the validity of the conclusion. The findings are responsible valid because they identify relationship between financial bootstrapping and working capital management practice. However, the study only show association, not direct causation. Also, the result may not be generalized all the SMEs because the research focus on Ireland. In conclusion, the study provides valuable insight, but the findings should be viewed together with its limitation. To conclude, this study provides valuable insight into the relationship between financial bootstrapping and working capital management among MES. The study has several strengths, including a strong research design, reliable measurement, and practical relevance. However, it also limited such as a limited geographical to use of self-reported data and inability to prove cautions. Overall, the study is considered credible and useful, but the findings should be interpreted with the next content of its limitation. Thank you.
So this article shows that effective working capital management help businesses maintain healthy cash flow by managing cash flows and outflow efficiently. In highlight, MSSME can reduce their dependence on external financing by using financial bootstrapping strategies such as collecting customers' payment faster, managing supplier payment terms, and carefully utilizing the material resource. Other than that, this finding also suggests that business should prioritize internal financing before seeking external loans, as this help lower financing costs and can improve more financial stability. Right? For many years, this article emphasized importance of monitoring cash flow regularly, strengthening receivable and payable management, and using accurate financial reporting and to support the better short-term financing decision. Alright. Overall, this practice helps businesses improve more liquidity, reduce financial risk, and support long-term and sustain the growth. Thank you for me.
Hello, myself Shweta, and my MC code number is MC2410230036. To conclude, this study shows that working capital management and bootstrapping are closely related in helping establish MSME manage their finances. The findings indicate that strategies such as delaying payments, using owner-related financing, and collecting customer payments quickly can improve cash flow and reduce reliance on internal funding. The study also emphasized that effective working capital management is essential for maintaining liquidity and financial stability, especially when access to external finance is limited. Overall, combining good working capital management with bootstrapping strategies helps MSME become more financially resilient and supporting their long-term sustainability and growth. Thank you.